And so the fact that they see enough in the horizon to say that we need to batten down the hatches should be a warning to everybody else.
Hey guys, welcome back to the channel. Today we have Chamath on the All In podcast, giving us the news in stocks, economy, and the financial markets. A recession is now inevitable due to rising costs for goods and services, stagnating wages, poor business growth, and an increase in layoffs. Because of all the panic selling, some people think the stock market is about to fall. It is incredible how much value of the global market has been destroyed in the past few months alone, and the financial system is now in danger. Chamath believes the market is going to make a hard landing, and with the severe corrections recently, we'll see that sooner than later. The correlation between the stock market and the Fed money printer is becoming more evident, and with the current economic downturn, it looks eerily similar to the crash of '08. Let's check out this interview with Chamath as he talks about his investment direction and where the stock market is headed in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
My prediction now is that I think the markets are bottoming and consolidating.
Yep, 100%.
And this is the time, I think, to start nibbling and start getting ready to really rip the money in. And I think there's enough signals every day that kind of like tell me at least that on the margin, it's time, because I think the markets do a reasonably good job of digesting news and then pricing the forward reality, right? Like today's price is really everything we already know. And so the real guess is what's about to happen in the future. And from my perspective, if you think about it one way, the financial markets have always had this thing that we have called a Fed put. What does that mean? A put is essentially the right to sell something. And what market participants have always known for the last decade is that if things got very hairy, if there was uncertainty in the market, the Federal Reserve would, and they have, consistently stepped in to create a buyer of last resort. And so it always eliminated that last part of true, supply-demand balance, because they would just come and say, don't worry. We will also relive what we have empirically known to be true, and it's been pretty well proven. The investments that one makes in this period will probably be the best for many, many years to come, because they'll have the most asymmetric upside. And that was true in 2008 and 9 and 10. It was true in 2002, 3, and 4. You're talking incredible companies just in those two periods. Think about this: Atlassian, Tesla,
Uber, Google,
Airbnb, Uber, Instagram, WhatsApp. Incredible businesses that have created tremendous value. And so there are businesses that have been invested in for the first time in 2022 and will be invested in for the first time in 2023 and 24. Which will be the leading winners of this next phase and this next leg up. And so the real opportunity is to find out who those companies are and get behind them, I think.
With a recession looming overhead, the question is, what impact will it have on the cost of goods and services in the meantime? Chamath believes the framework for the bottom of the market is being built right now, and in the next 30 days, we could see that come to fruition. The UK is currently experiencing a 40% housing bubble that will cause people's rent to skyrocket 3 to 4 times what they're paying. If this happens, we'll see a major collapse in that market as well.
If there is volatility beyond a certain amount and people cry uncle, we will not allow the markets to sort themselves out in an orderly way. We will step in. And that's what, again, what we just talked about, the central bank put, in this case, the Fed
interventions.
Put. And these interventions really pervert a market because you don't know what's going on. And that has huge ramifications in the real economy. So Nick, if you just throw up this chart, the thing that is really important here, and what this chart shows, is essentially all of the hiking cycles that we've gone through since 1983. So 83, 87, 94, 99, 04, 15, and the current one. And here's what I just want to call out for you guys. What's incredible is that other than the one in 83, so this is sort of like, that last big one, what we've seen is that the stock market has a tendency to immediately go to the conclusion very early on in a rate hiking cycle. And now, why is that important for normal folks listening to this thing? Well, the reason why that's important is right now we're in month 7 of a cycle. We obviously don't know how long it's going to be, but the odds are improving every day that we're near the end versus the beginning. The closer we get to the end, or more importantly, the closer we psychologically know that the end is coming, we start buying. every time we trade down, the market consolidates very quickly. And we sort of so I think we're forming a bottom. I do think that Stan is right. We are going to see a hard landing recession. Something will break in 2023. I hope it doesn't. I hope it doesn't affect a lot of normal people. But at the same time, I think what's happening is in the equity and financial markets, we are consolidating a bottom because we're seeing through to that end state. And this is where cheap equity gets bought. So why is there a reason to sell now? I think a lot of the people that are selling, the smart money sellers that I talk to, are essentially right now selling to book in capital losses to offset other capital gains from this year, a term that's called tax loss harvesting. And so if you have gains through this year, which some of us do, this is the great moment to just sell the losers, to book the loss, to net it out so that you can minimize your taxes for next year. That's probably, I think, where we are at. And I think that's why there's still consolidated buying. So what is the hard landing, Jason? If I had to predict, I think what David said is absolutely right. You're going to see unemployment get to an awkward and uncomfortable number. 5-6%, I think, could be something that we see. And I think you're going to see a lot more companies pull way back on their spend because demand is going to really modulate. I'll give you a crazy example. What happens to all the people in the United States that are on ARM mortgages, right? Adjustable rate mortgages. When those things reset, they're going to reset 200-300 basis points higher. Their monthly payments are going to go nuclear.
Oh, it's already happened, Chamath. I literally had a family member call me about this, and they were like, "What do I do?"
So in the UK, in the UK, 40% of all mortgage dollars are interest-only ARMs that will reset in January to around 4%. 40%. Can you imagine how upside down the UK economy is going to be when people have to spend 3 and 4 times more to keep their home?
And then people have to go to work. So people who have not been participating are going to have those bills come in and they're going to have to go to work.
They're going to have to go to work. It's not as if governments have collectively decided that you cannot have debt to GDP above a certain number. That doesn't happen, guys. We passed 100 under Obama, and we've just kept printing money. So whether we like it or not, and I'm not saying I'm a fan of this or it's right, we are kicking the can down the road. And what we're doing is we're extending the maturities. You'll eventually have 100-year government bonds, okay? Just like you have now, multi-decade long corporate bonds.
We missed a chance for that. We missed it.
You saw the Bank of England decide that financial stability was more important than financial viability, meaning the things that she wanted to do were not viable. So you could have let the financial markets sort this out, which would have forced the prime minister to basically abandon the policy. But instead, the BOE said, no, we're an unlimited buyer of UK gilts, which is the name of the UK bond. And everything snapped back. We're back to where we were before her speech and before the Chancellor of the Exchequer's speech. And so it's as if nothing happened. And that's what's so insane to me, which is that even though the Bank of England, by the way, in the next week or two are going to raise rates 140 basis points. 140 basis points, almost double what the Fed has done the last 3 times. They're doing both at the same time. They're both raising rates and they're acting as a backstop for bad policy. And this is what's wrong right now in the world. We do not have a real check and balance. And so my point to Friedberg is just that I'm emotionally on your side. But the problem is, if these folks keep getting bailed out, David, they're just going to keep doing this stuff and there's no end in sight. This is why I think we're in a bottoming process. I think the bleeding edge of the smart financial actors are actually on Sachs's side and Friedberg's side. But then they're taking that next intellectual leap and saying, okay, well, what happens when Apple basically says, hey, guys, I'm going to have to fire 15% of my employees? I think what happens is the Fed intervenes. And I'm just using Apple as an example. But there is a threshold of demand destruction, Jason. I think you're right, where we have the Fed come back on the table and the markets just go bonkers.
The following months will serve as a clear indication of what to expect from the stock, crypto, and capital markets, despite the fact that they may currently be driven by fear. The regular consumer will be the one most impacted by this recessionary environment, and the credit and housing markets' financial corrections are another issue to watch out for. Loan interest rates are rising quickly, and Chamath thinks we could be witnessing a bubble there as well. What do you think about the current state of the market, and how do you believe it will impact the typical consumer? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.